news and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the yen has extended gains after the BOJ's interest rate hike and announcement of a reduction in bond purchases. Well, joining us now is Grace Peters, Global Head of Investment Strategy at JPMorgan Private Bank. Grace, thanks for joining us. I feel like we have it all today. It's the chip makers. It's what's happening with the BO Japan. I mean, we've been waiting for that hike for quite some time.
Yes.
And then we're expecting maybe news from the Fed. I mean, is it a feel-good factor just because the BOJ was able to finally raise interest rates?
I think, to me, it fits under the umbrella of normalization. And whether that's coming from the BOJ or what we hear from the Fed later, the theme of normalization, I think, is one of the key themes that we need to see to continue supporting equity markets as well as risk assets more broadly. So I do think broadly encouraging. And when we think about the most recent data sets that we've had globally, you know, the narrative around slowing but still resilient growth driven by the consumer, household consumer balances, balance sheets and corporate balance sheets. And what we're hearing out of earnings season so far is broadly supporting that narrative, but obviously with some geographic diversion.
We had a big correction last week, and I don't know whether we're going to see those bouts or like those days of is it panic or just reflection?
I don't think it's panic. I mean, actually, if anything, the correction that we've seen is entirely normal and healthy. What was abnormal was until we hit this volatility in July, we'd gone for 356 trading days without a 2% drawdown. And when you look back over the last 30 years or so, volatility, intra-year volatility in markets is normal. Typically, you get about a 13% pullback. So I don't sense there's any degree of panic. I mean, we obviously must guard against complacency. When we think, as money managers, about the key risks out there, geopolitics, politics and complacency are three that we commonly think about. So I think a pause is healthy. In terms of equity markets specifically, for our year-end targets for the S&P through the end of the year, we're sort of range-bound. But when you look over the next 12 months, we still think there's 6-7% upside, so healthy growth driven by corporate profits, and we will certainly be watching this earnings season closely.
Grace, you mentioned normalization. Is there a worry that actually inflation spikes back up? We're seeing huge tensions in the Middle East. There are many questions about tariffs and this, America first and dollar strength policy that we could see, or dollar weakening policy that we could see from the US.
I think for the Fed and for the central banks at large, you're still tying with both downside risk to growth and upside risks to inflation. They are two tail risks that we absolutely must not get complacent about. With regards to the upside risk to inflation, I mean, yes, geopolitics is certainly one angle. We also have got, obviously, a big event coming up in the US election coming through the autumn. And depending on who ends up in the White House, some of those policies could also end up being inflationary. So when we think about that in the context of the portfolio, some of the assets to build portfolio resilience that we're having conversations with clients about are ones that would actively benefit from some of this inflation and certainly provide a buffer in portfolios, and they would include assets like infrastructure and gold.
Grace, the other one, BOE tomorrow. It's exciting because we haven't heard from them because of election for quite some time. What are you expecting?
Yes. Well, I think we are expecting the first cut from the BOE when it comes to August. Certainly the data in the UK has been at the margin weakening. When we look at retail sales, we look at the housing data, we are seeing, still positive growth, we think, but on a weakening trajectory. So we do think that paves the way for an August cut from the BOE. That in turn should support risk assets to some extent, and actually whilst we've generally had a preference in the UK market for exporters from the UK, actually with the new government, with the rate cut, you could start to see UK domestic businesses faring a little bit better, supported by a positive. Small cap to some extent, yes, more 250 I'd say. I think rates are still high, and when we look at the anticipated trajectory of rate cuts over the next 2 years, it's still higher than we've seen in the past. So indebted companies, I still feel, should be avoided. That would generally push us up to a mid and large cap rather than too much in the small cap space.
Grace, let's also speak about tech, but we'll get back to you, Grace Peters from JPMorgan Private Bank. Let's also be joined by our resident expert in all things media and tech. Shares in ASML and other Dutch chip-making equipment are gaining this morning after Reuters reported that the U.S. planned to exempt chip tool vendors from Japan, the Netherlands and South Korea from upcoming export restrictions. So let's bring in or Tom McKenzie. Tom, I mean, we're seeing like quite a bounce in technology. I think the European technology stocks are up like 3.5% on the back of it.
Yeah, really big moves on the back of this report. Again, from Reuters, as you rightly say, that the US is looking at potentially carving out the Netherlands, Japan and South Korea from these very rigid restrictions that they hope to be putting in place in about a month's time that would constrain the ability of these companies to ship equipment into the Chinese market to key semiconductor makers, and particularly any company that produces equipment that has any US software or hardware. Now, what Reuters is reporting suggests that Taiwan and Malaysia are not excluded. So you're seeing big moves in Japanese companies. You're seeing big moves, of course, in ASML, listed in the Netherlands, because they ship these extreme ultraviolet lithography machines into the Chinese market. Now, the caveat to that is that these restrictions, these companies are still going to face restrictions. The idea that ASML can freely send kit into China is just not correct right now, and that's not going to change anytime soon. But it's the most high-end tech that ASML puts into the Chinese market. They are not doing that right now, but it's about whether further down the portfolio, whether they are now more restricted or, in fact, if they have a bit of breathing room. Interestingly, JPMorgan's analysts say this could be about setting up a negotiation between the US and their key allies, Japan, South Korea and the Netherlands, around how they put in place these restrictions in terms of this foreign direct product rule that it looks like the Biden administration are looking at putting in place. But for now, some relief from investors in those companies that it seems are priced in the worst in terms of these restrictions.
As if by magic, we also have a JPMorgan analyst and one of probably the authors of that. But very quickly, Microsoft, I mean, what did we learn from earnings from Microsoft and Samsung?
So two key things from Microsoft. One is that the cloud growth was less strong than many analysts expected. So that came in the quarter, 29% growth. That's down from the previous quarter. The other key line is the spend on CapEx. You know, Francine, there's been a lot of scrutiny of these companies in terms of how much they're spending on the data centers, on the servers, on the build-out around AI, and that increased and quite substantially. It came in above the estimates. So if you strip out the licenses that they pay in terms of the data centers, you're looking at close to $14 billion in terms of CapEx spend, up from $11 billion. If you include the fees that they pay to license some of these servers, data centers, then it's actually $19 billion. And the CFO executives at Microsoft saying that spend is just going to increase because they're still seeing that demand. They still can't match the demand, they're saying, but it comes at that CapEx cost.
Thank you so much. Tom McKenzie there with the very latest on some of the earnings news and some of the big news that we had on chip makers. So, Grace, I mean, what do you make of, is it still an industry that's worth investing in, or it feels a little bit frothy or price perfection, as diplomats say?
So I'd still say that generative AI is going to be one of the key themes when we look over a multi-year time horizon, the other one being security and the changing nature of national security. What I would say is AI is so much more than just 6 or 7 companies. Yes, absolutely, they are key to the first phase. But as we look to the AI build-out, there are so many more industries across industrials, across energy sectors that are going to need to participate in the second derivative impact. So, you know, a bit of consolidation, as I said before, is healthy. I imagine this is going to be reasonably short-lived. But ultimately, we are encouraging our clients to broaden out their AI exposure. And we think that this is part of what's going on as well. Just two things that I'd add to Tom's comments. Firstly, I'd say when we think about, you know, some of those results overnight and some of the slowing cloud demand, some of that is to do with supply chains and the availability, exactly, of some of these critical, semiconductors, etc. And therefore, semiconductor equipment makers are only more important as part of that process. And then the second thing, and it's Bloomberg, one of Bloomberg's slogans, context is everything. When we come to the European, earnings season, people are feeling much, less confident about Europe, obviously with everything going on with the parliamentary elections, the slowing that we've seen in growth. Generally, expectations, the bar is lower for this region. And I think that actually sets Europe up reasonably well for some of our quality companies to perform.
But, Grace, if we have a completely different, world order, right? After the Second World War, it was all about the global economy, working together, trying to get GDP up. If now we're putting national security above economic growth, is that being priced in? Because you're going to see different trading blocks, and that could change every year or so.
Yes, I think there are parts of this that are absolutely not priced in. And when we think about, the macro impacts, it was what we mentioned before, the most direct macro impact is higher inflation, as non-economic capex is being spent for these broader national security needs. But there will be beneficiaries of that capex, and they are often in cyclical sectors or sectors that have traditionally been cyclical but now will become more focused on structural growth. And I think industrials are a big part of that. Some parts of the commodity complex will also be part of that. And actually, when you add that to a portfolio, whether it be in public or private markets, particularly in the public side, you actually get a broadening of your equity exposure by geography and by sector that I think is going to be very complementary and fits with this current rotation theme as well.
But Grace, so does AI also change? I mean, it changes the whole economics. You know, we're probably going to be 20% more productive. It's probably deflationary. I haven't really seen a true model of that. But does it also change the equity market depending on early adoption or not?
I think so. The key thing for me is that margin sustainability is more likely. We see US margins in particular at all-time highs, and some would see that as a vulnerability, whereas I would see it more as an indication of the fact that companies have done a fantastic job at passing inflation on, demonstrating pricing power. Yes, some of that might wane, but I think AI will be a key factor in helping companies continue to generate a high return on invested capital, keep their margins high, and thus earnings growth. The icing on the cake to this soft landing that we foresee is that it is prolonged, that you actually see trend GDP move up over the next decade to above 2% in the US, and that obviously should also support a higher degree of earnings growth going forwards on a multi-year basis. We still have demographics like aging that also are pushing down GDP, but I think on balance, generative AI could be constructive for productivity, for growth, and thus for large cap corporates with those strong balance sheets to invest.
Yeah, aging especially hard here in Europe. Thank you so much, Grace Peters, Global Head of Investment Strategy at JPMorgan Private Bank. Now, we're just getting a little bit of breaking news. The SIX Swiss exchange says that trading has been halted due to technical issues. So we'll keep an eye on that. For the moment, we understand that not all of the Swiss markets are open, so be careful if you're trading anything right now. Coming up, our exclusive interview with the Air France-KLM Chief Executive Officer Ben Smith. We'll discuss the carrier's sponsorship of the Paris Olympics, its new luxury lounge, and the turbulent trajectory ahead for airlines. That's up next, and this is Bloomberg. Well, Air France has launched an exclusive new lounge at Charles de Gaulle Airport in Paris in an effort to reward its highest-paying passengers. Now, the carrier is hoping its millions invested will pay off as airlines wrestle with mixed forecasts. Now, for more, we're joined from the lounge by the Air France-KLM Chief Executive Officer, Ben Smith. Ben, thank you so much for joining us. Now, it is quite incredible to look at some of the airport lounges really being renovated, but also some of the luxury hotel rooms at Charles de Gaulle. What's the strategy there?
So La Première for Air France, what we call first class here, La Première, dates. This is our top line service. We've been historically we've been able to produce a luxury service, luxury product, second to none in Europe, across the Atlantic, and many other parts of the world. As you may know, Air France is one of the two airlines that flew the Concorde. The luxury leisure market is very, very healthy and strong here in France, and we've upped the product offering that we have with this new ground service that we've got at the Charles de Gaulle Airport here in Paris.
So interesting. So, Ben, what trends are you seeing in August in terms of demand for Paris air travel? I know there's a shortfall because of the Olympics, but has there been a pickup in recent days after the start of the Olympics?
So we already, I guess a couple months ago, started seeing trends decrease in corporate demand, both inbound and outbound from Paris and from France during the Olympics. We already forecasted that a year ago, but we were not expecting the decrease that we did experience. So we did release advanced information on that. But what we're seeing now, the trends are moving back to what we've experienced over the last few years. So, more regular levels of demand for both business traffic and high-end leisure. So that's giving us a little bit more comfort for the rest of the year.
So I know costs have also been top of mind and one of the challenges that the group has been facing. How easy or difficult has it been to negotiate with French unions this year in the run-up to the Olympics, especially given all of the political turmoil that we're seeing in France right now?
Well, we've been developing very, very strong relationships with our 17 unions here at Air France, and very happy and proud to say we have not had a labor disruption in 6 years, which is very new for Air France. We've had relative labor stability. And if you look at all the other transportation companies in France, the majority of them have had big social unrest, which has resulted in a lot of passenger or customer inconvenience. So up until today, and based on the relationships we hope to keep that stability in place for the long-term future.
You're expecting, there has been disruption because of traffic control and things like that in France. Are you expecting things to stabilize?
Well, we haven't at Charles de Gaulle. We've been relatively we haven't been impacted by that even through over the last couple of years. So we expect that to stay in place, that relative calm. I mean, this airport is it was not designed for a hub structure, but for our own origin destination traffic and our premium offering. What we're putting in place, like this new lounge, is really fantastic. I mean, if you're starting or terminating your journey here in Paris, it's completely exclusive. It's like a private jet experience. We have a Michelin star chef who runs our restaurant. You are completely outside of the public area for security, for passport control. We drive you to and from, your flight in a Porsche, and really, it's from what what our new customers or customers who are newly experiencing this. The feedback is absolutely amazing.
Yeah. But are you concerned at all about the reliance on these premium leisure passengers in the absence of business travel?
Well, historically, even before the Olympics, Air France, the premium cabins, La Première, was made up of 50% leisure. Paris is not London in terms of corporate traffic. So we are seeing our corporate traffic come back. I mean, a short two-month hiatus, but we expect that to come back. And leisure is very strong. And I think the Olympics is really helping us better position the country, better position better to position France as a great destination. I don't know if you watched the opening ceremonies, but it was just like a fantastic ad for Paris.
Everyone watched
France
it.
is already the number one. France is already the number one inbound market. So this is why we're investing in this. We believe in this product. It is profitable for us. There is no U.S. carrier that offers a first-class product, and we believe our product out of Europe is by far number one.
You were there. It was a very controversial opening ceremony, but I'm going to say I was one of the few that really enjoyed it. But does Air France have enough planes for replacements of its old fleet, like the A321s? And there has been significant delays from some of the manufacturers. Does that make you rethink your plans going forward?
No, we're okay on the fleet front. As of today, we don't have. We have a couple 787s that are left to be delivered at KLM. But at Air France, we've got a sizable order of Airbus A350s, which will be delivered through the end of the decade, and those are coming in pretty much on time. And on the medium-haul fleet, we have a sizable fleet of Airbus A220s and Airbus A320, 321neos, and those are pretty much on time. So we're not too concerned about having the right amount of capacity, and we do have quite a bit of flexibility in our existing airplanes and older generation. That if we do have delays, we'll be able to maintain the capacity.
In terms of ticket prices, do you think there's a structural shift in ticket prices going lower because of revenge spending on travel slows down post-pandemic? I know Lufthansa has been, for example, talking about yields being under pressure, especially on Asian routes.
Look, we're not heavily dependent on Asia. It is an important market for us, but with what's the most concerning for us are twofold. One, the fact that there is a Russian overflight ban for European carriers, so that makes travel to Europe. If you're flying on a European carrier, you're adding 2-3 hours. And on top of that, there are new taxes and charges which are going to be imposed on flights from Europe to these regions. So that's more. Those are the things that we're concerned about. But in terms of yields and how that's going to have an impact on us with what you call revenge travel, we don't see that to and from Asia being that big of a concern.
Do you see it elsewhere in other routes in Europe, for example?
In Europe, we're not a big player on continental Europe. Most of our European operation is to feed our long haul. The European market is dominated by low-cost carriers. They have the bulk of the market. Okay. We do have our low-cost carrier who's based at Orly Airport, and we are expanding there, and that's working out quite well. We're the biggest airline in Paris. We historically have not had a big low-cost operation, so really it's organic growth for us at Orly. We see that being positive.
Okay, so interesting. Ben, thank you so much. And congratulations on, of course, the Olympics, but congratulations on that lounge, La Première, that you've just opened. The Air France-KLM Chief Executive Officer there, Ben Smith. Now, let's also look at some of the market movers, but let's focus on some of the corporates. So ASML leading this worldwide rally in semiconductor stocks after Reuters reported that the Biden administration planned to exempt chip equipment makers in Japan, the Netherlands, and South Korea from upcoming exports restrictions. Now, the other stock we're watching is Airbus. Those shares rising after the airplane manufacturer reported better than expected results from the second quarter. HSBC also announcing a $3 billion share buyback after the lender reported earnings that beat expectations. Siemens Healthcare, well, they reported adjusted EBIT and revenue for the third quarter that actually missed market expectations. So you can see a little bit of pressure on, for example, that stock down 7.2%. Coming up, we talk geopolitics. Hamas says Israel has killed its political leader, Ismail Haniyeh, in an airstrike in Iran. We get the latest from the Middle East next. And this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The hawks land in Japan as the BOJ hikes interest rates and unveils plans to cut bond buying, while Governor Ueda says 0.5% is not considered a rate limit. ASML rallies after reports that the U.S. plans to exempt chip makers from Japan, the Netherlands, and South Korea from upcoming export curbs. Plus, Hamas says Israel has killed its political leader in Iran. We'll bring you the latest as tensions rise across the region. So on to the Middle East, and Iran's supreme leader has vowed severe punishment for Israel after Hamas says its political leader, Ismail Haniyeh, was killed by an Israeli strike in Tehran overnight. Now, for more, let's bring Horizon Middle East and Africa anchor Jumana Bersace. Jumana, I mean, this escalates things. How worried is it that actually, first of all, what do we know happened, and how significant is a figure is Haniyeh?
Yeah, good morning, Fran. Well, we walked in this morning with news out of Hamas that Israel had targeted the political leader Ismail Haniyeh in an airstrike in Tehran overnight. It happened at around 2 a.m. local time. Iranian state TV reporting that not just Ismail Haniyeh, but his bodyguard was killed alongside him. And of course, it is notable that Ismail Haniyeh was in Tehran to begin with. He was there for the inauguration of the new Iranian President Pezeshkian, who had his inauguration ceremony yesterday. So today is his first day on the job. Important to note here that we haven't had an official comment yet from Israel themselves, even though Hamas are pointing to Israel being behind this attack. However, his death will be seen as a major victory for the Prime Minister Netanyahu, given some of the domestic turmoil he's been facing recently, the splits within the coalition. But they have been consistently saying that they want to go after the leaders of Hamas since October 7th. So this will be seen as somewhat a victory. Also, bear in mind, Francine, that Ismail Haniyeh was one of the chief negotiators for the ceasefire discussions. So it does raise questions about the future of those ceasefire discussions.
Yeah, are we potentially bracing for more violence, and how big could the escalation be?
Well, just in the last hour, I think it is pretty notable that we got some comments from the supreme leader of Iran, the Ayatollah Khamenei, and he is saying severe punishment awaits Israel. That is a quote, vowing harsh punishments. We even heard from President Pezeshkian himself, his first day on the job. He's saying, we will defend our territorial integrity. Iran will make terrorists regret their actions. So they are not taking kindly to the fact that this airstrike happened on Iranian soil. The background here is that the president, Pezeshkian, actually campaigned on a platform of being a reformist and looking to open up diplomatic channels once again with the West, with the view of eventually lifting some of the sanctions that have been burdening the Iranian economy. This, of course, changes everything. The rhetoric that's coming out of them is very harsh. And indeed, other leaders and other foreign ministers from around the region have waded in as well. Qatar, for example, another leading negotiator with those ceasefire discussions, condemning in the strongest terms the assassination of the head of Hamas. We're also hearing from the Jordanian foreign ministry saying that the assassination is a violation of international laws and an escalation that will lead to more tension and chaos in the region. So the region is on high alert.
It certainly is. Jumana, thank you so much. Jumana Bersace there covering the Middle East. Now, a new Bloomberg poll says Kamala Harris has wiped out Donald Trump's lead across 7 battleground states. This as the U.S. vice president rides a wave of enthusiasm amongst young, black and Hispanic voters.
The momentum in this race is shifting. And there are signs that Donald Trump is feeling it. Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say, say it to my face.
Well, let's get more on today's big take from Bloomberg's Chad Thomas. Chad, good morning. So what's the main takeaway from these swing state polls for Harris and Trump?
Hi, Francine. Well, the main thing is that the momentum that we're seeing with Harris, it is coming through in the polls and is coming through in polls in swing states, these states that will ultimately decide the election. And the big takeaway here is that Harris looks to have more paths to the presidency than Biden had before he dropped out of the race. Harris is now leading in Nevada and also in Arizona, and she's tied in Georgia. Those were states that were really slipping away for Biden, and it was looking like he had no chance in those particular states. And that's important as well because the Democrats have always talked about this blue wall. These are states, Francine, in the Midwest. It's Wisconsin, Michigan, and Pennsylvania. And those were states that they had to win if they couldn't pick up these states in the South. If you look at Pennsylvania, that is the one state where you really see that Trump is still in the lead. So what we see from these polls is that because Harris has more paths to the presidency, she could, in theory, lose Pennsylvania and still win the presidency. But of course, Pennsylvania is still a big target for both the Republicans and the Democrats.
And Chad, do we expect this bump for Harris to last?
Well, this is what you'll hear from political analysts and pollsters. She has a big bump at the moment that's likely to continue for a few weeks into her pick for VP and also through the Democratic Convention. That's pretty normal. They'll be looking at the polls after Labor Day. That, of course, is the official end of summer for the Americans, and that is when people really start to focus in on the presidential race. And so in September, you're probably going to have a better sense where are things starting to settle in the race for the presidency.
Chad, thank you so much, as always, for joining us. I mean, this is probably one of our most interesting stories today, so I urge everyone to also go on the Bloomberg website or the terminal and read it. Chad Thomas from Berlin. Now, coming up, Schneider Electric shares gaining this morning after they posted earnings. We'll speak to the chief executive, Peter Herweck, about the company's results. That's next, and this is Bloomberg. Schneider Electric is up this morning after boosting its full-year organic growth earnings forecast. Now, joining us to discuss the results is Peter Herweck, the chief executive of Schneider Electric. Peter, welcome to the studio, welcome to the Pulse, and thank you so much for joining us. First of all, there's a nice little boost when you look at your share price. I mean, what are you most looking forward to the second half of the year? Given what we've seen in the first half, what does it tell us about the shape of the economy right now?
So, first of all, thank you very much, Francine, for having me here. You know, the first half, despite the numbers, was a proud moment for the company because we've been named by the Time magazine and Statista as the most sustainable company in the world. It's not the first time for us, but it's great. And it fuels also growth as we drive electrification and digitization. As we're looking into H2, you know, we've seen an acceleration from Q1 to Q2, and we anticipate that to continue. So 6 to 8% growth, and we've lifted the margin guidance for the year, so it's going to be good.
Peter, do you worry at all because of the legislative elections in France, which frankly show a very divided society, because of what's happening in the U.S., that the climate agenda, that the electrification agenda is taking a step back?
Listen, you know, we've been around for 180 plus years, and I always say, you know, we need to be successful despite what's happening in the short cycle political environment, and we're prepared through our multi-hub setup with you know, being able to develop, manufacture, and sell in 4 global hubs. Europe being one, then China, India, and the U.S., which represent our biggest markets. So we're prepared for what's coming, and I'm quite confident, respectively.
What do you worry about the most of what potentially could be coming? I don't know whether it's, you know, trade being redrawn or whether it's something else.
Well, you know, of course, people like ourselves are always worried if there are really sudden changes on something. But I think we've prepared over the last couple of years, because trade barriers is nothing new totally. And I'm a big fan of not shipping R&D or shipping products across the globe. So we have setups in those big hubs, and the shipping in between has really minimized, and with it also barriers for us have minimized. We produce and develop in China for China, in India for India, in Europe for Europe, in the U.S. for and North America for North and South America.
But we're also seeing, I mean, governments under intense pressure, budgets under intense pressure. Again, will it take longer to green the economy because of the funds available for some of the governments?
So, you know, we continue to expect that spending is going to continue, maybe pending on how elections will go in North America, for example, or in the U.S. I think there is going to be a renaming of the IRA to something else, but I don't expect big budget cuts. We rarely see those from one administration to the other one. I think the European Green Deal is in deployment, and then you have the energy performance buildings Act coming in Europe, which will accelerate the rebuild of buildings, and we've prepared for that also with an acquisition that we announced today in the workplace management for buildings.
Are you expecting more acquisitions actually after this one? Just because you could see valuations, attractive. You're sitting on cash, so go for it.
Well, we've said to the investors at our capital markets day just 6 months back that primary focus will be on organic development. We're attached to our credit rating, where we just gotten upgrades. We have had 14 years of progressive dividend. And then having a solid balance sheet allows us to be agile and opportunistic if something comes up that fits into the strategy.
Talk to me a little bit about AI and actually how that fits into your strategy and how it could revolutionize or significantly change your industry.
Yeah. So, first of all, there is a lot of talks about AI. Where is it deployed? It's deployed in data centers. We're the world market leader in furnishing electrical infrastructure to data centers, so medium voltage, low voltage, but also into the racks, cooling, the building management system, driving energy demand down. So this is a very vibrant market at the moment. We see unprecedented demand at the moment in those areas, and we are using AI ourselves to improve our operations and build it into our products.
So how much significantly does it change your operations? When we talk about productivity, is it deflationary? Does it really increase productivity or free, cap to do other things?
Yeah. So if we have roughly 195 projects going on internally to drive productivity, to drive growth, to drive customer satisfaction, and to best utilize the resources that we have. And if you look at our gross margin in H1, it's been historic at 43.4%. And of course, this comes also through the deployment of AI. And then we built it into our products to help our clients.
And are you waiting for new software from from the big ones, or you're doing again? It's interesting to see how every chief executive sees this, because it could significantly change spending, but also, internal R&D.
Well, at the end of the day, we're using AI for a long period of time in our software company here in the city, Aviva, that has been grown fabulously, and it deploys AI. Of course, it does come with a cost, but there also needs to be a benefit. And at the end of the day, we're all business people. A cost cannot exceed benefits, but we see that to happen. So it's all good from a growth perspective, from productivity perspective, and then also how we're driving customer satisfaction.
Peter, we touched a little bit on acquisitions and the fact of what you said 6 months ago about organic growth. But if you're not doing any big acquisitions, do you want to give back to shareholders? And how important is it in this kind of market environment that you're seeing through dividends or buybacks?
So we've committed to a progressive dividend with a rough payout of 50% of the earnings, and then I think it's good to have a low leverage that gives us opportunity if cases come up. I mean, a quarter ago, people were asking me about a software company called Bentley Systems, with whom we were in talks. We put the pencils down, and now we've acquired the majority in Planon, which is a workplace and asset management company that fits right into our strategy, and it's good to have firepower if the opportunity comes up. And then we're listening to what our shareholders have to say.
What's your take on the UK? There's a new government, so maybe there's more an energized commitment to keep the balanced books.
So the UK is an important market for us in Europe. It's one of the top 3 markets that we have, and we're eagerly looking at how some of the transformations hopefully positively influence the environment. It's been a tough market in respect to inflation, and we hope to. That inflation is going to go down, and it will help businesses to grow, and people have more available spend.
Yeah, and we'll see the Bank of England is tomorrow. Peter, thank you so much for joining us here in the studio in London. That was Peter Herweck, the Chief Executive Officer of Schneider Electric. Now, coming up, HSBC shares are higher this morning after an earnings beat and the announcement of another $3 billion share buyback. We'll hear more from the outgoing Chief Executive, Noel Quinn. That's next, and this is Bloomberg. Welcome back, everyone. Now, HSBC making gains after reporting second quarter pre-tax profit of $8.9 billion, beating estimates. Well, Noel Quinn signed off his final quarter as chief executive by announcing a further return of $3 billion to shareholders.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio quite well above our target range. Therefore, we're able to both grow and distribute via buybacks.
Well, Bloomberg's Jenny Serene joins me now, who, of course, runs all of our finance coverage out of London. Jenny, I mean, there's so much going on. HSBC, it was quite, we've interviewed him so many times. This is it. He's like packing up and passing on the baton.
That's exactly right. Yeah. I mean, he said his first step is to rest, which after 37 years of working at a bank, I get. But yeah, he's off to greener pastures, as they say.
So what are the challenges? I mean, a new chief executive is coming up. This wasn't it was actually quite a good quarter. But what are the main challenges going forward?
Yeah, I mean, I do think, so one of the key ones is just the fact that they're kind of deepening that pivot over to Asia, really betting big on China still. And you've got two candidates over in the U.S., both Kamala Harris and Donald Trump, who are poised to be a lot more hawkish on China in the coming years. And so I think that's that very delicate geopolitical tension that he's going to have to navigate that I think will obviously dominate a lot of his decisions and a lot of what he has to work through. And then beyond that, you've got falling interest rates. And so obviously they've stuck around higher for longer up till now. But the bank has been doing a lot of work to kind of ready itself for that new era. And I think that's going to be a tricky one because you're really facing kind of that macro headwind, as it were.
Jay, what do you think the most significant story from HSBC was? So, of course, there's, the buyback, but there's also the fact that they're planning to keep their bonus pool broadly flat. I don't know whether that's a sign of things to come for other European banks.
Yeah.
Or UK banks.
No, I mean, I think it's a really good call out. So, yeah, so for now, they said they're planning to keep that bonus pool flat, which is really surprising. If you look at some of their key Wall Street businesses, they actually performed quite well during the quarter. So you had equities trading revenue that more than doubled compared to a year ago. You had investment banking up. You had FX trading up. But I think really what this points to is they're really trying to batten down the hatches, keep a lid on costs, keep expenses in check because they know interest rates are poised to fall. And so even though the Bank of England has held off so far, I think the market generally still does think that those rate cuts are coming. And this is a bank that really wants to be ready for that moment when it happens. So I think that's what they're trying to telegraph here. But I'm sure there's some bankers and traders that are not very happy inside of HSBC today.
Yeah, I'm sure. Jenny, I mean, apart from that and interest rates, do they worry more about the health of the consumer, which kind of relates back to that, or the fact that it's struggling, difficult to compete with the U.S., especially if there's more deregulation coming?
Yeah, no, I think that's another good one that really this new CEO will have to battle. So far, consumers have held up okay. So it's, I think, pretty surprising given what what the economy has put them through in these past few years. But people are still keeping up with their bills. Their provisions were still, largely in pristine shape this quarter. And so I think, Barclays reports tomorrow. We're expecting to hear a lot more out of them on that. But yeah, so far, consumers have been able to keep up with their bills pretty good.
Jenny, thank you so much. Jenny Serene there with the very latest on HSBC. Now, Airbus shares also up today after the plane maker's earnings beat estimates. The company said it was booking a charge at its space unit. Now, that's forced the plane maker to cut costs amid lower than anticipated aircraft deliveries.
We have underestimated the risk that we have embarked when we signed the contract or when we launched the programs. So we have had to record charges in our space program earlier this year. Actually, we informed the market in June of our challenges, and that's where we are in space. So we have launched a turnaround of the programs.
Well, let's get more from Bloomberg's Benny Camel. Benny, good morning. So what do you make of the Airbus results?
Well, the numbers were fairly mixed, and it was interesting this time that we got a fair bit of intel on the space business. Most people obviously associate Airbus with the civil aircraft manufacturing and less with sort of space and defense. But that was really where the focus was this time round. And for all the wrong reasons, they had almost $1 billion in charges in that division. And we just heard from the CEO there. They had some contracts that didn't go the way they'd wanted to. They're still pouring through the numbers here. They've put a new management in place at that division, so that group is now looking at the operations and is thinking hard about how to turn that business around. It was interesting from Faury, the CEO, yesterday. We asked him, well, what are the options for this business? Does that include maybe even getting rid of it? And he said, all options are on the table at this point. We're really taking a deep dive into the operation. So this could go either way. It could go along the way of a fix. It could go along the way of improving the business via acquisitions or even a wholesale disposal.
So, Benny, first of all, you're looking very dapper. I mean, you're very Wimbledon ready. But what can we expect from Boeing?
Wimbledon ready, yes, and Boeing ready. That's later in the day, in a couple of hours. That will be a mixed bag, for want of a better word. We know that the first half has been truly difficult for Boeing after that blowout early in the year. We know that they're burning through a lot of cash. And so really people will be looking at what does the second half of the year bring? Can they stop the bleeding? Can things improve? And interestingly, who will oversee all of this? We still don't know who the new CEO will be. Dave Calhoun has said that he wants to step down. So maybe even today we will get some more on that. We might even get a name. And the question really will be, what kind of a turnaround can that person achieve?
Benny, thank you so much. Benedict Camel there with the very latest on Airbus and Boeing. Now, up next, Bloomberg Brief, Danny Berger and Manus Cranney in New York, and this is Bloomberg.